Okay, then away we go. This is Dennis Wilburn. Welcome to the After Market Monday. Really interesting market today. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always favor trade prior to the risk of their own personal capital. Aftermarket Monday, what we want to be able to do with this is actually issue timely, actionable intel at the beginning of each week. Right now, market downside, more downside and more volatility is what we're looking forward to as we proceed at this point. We'll be taking a look at stocks and ETFs that are potentially setting up. If you are a premium member, of course, we had our stops in place. We got several of our stocks that we were long in stopped out. And so that's the way the system's supposed to work. We really got whacked to the downside today with the market. So we focus on 3 strategies, 4 entry rules, 6 exit rules. Strategy number 1 is a stock and ETF portfolio building for capital growth. Strategy 2 is we're targeting somewhere between $500 and $1,000 per week worth of income utilizing primarily option trades. Then strategy 3, foundation position in place for the Spiders, Tesla, and BABA. We're looking for capital growth and weekly income. Here's where we set. We gave back some of our profits, but we're still up about almost 17% for year to date. So I'm pleased with that. As you can see, NASDAQ really turned down. The Dow turned down, down for the year, down from last year's high. S&P gave back almost all of its gains for this year so far, has got us back down to 1%. NASDAQ Composite and Russell still maintain the strongest of the entities. Okay, stocks setting up for the 24th and beyond. Things that are moving the market. Well, of course, the tariff tango. The saber rattling that's going on between Europe, United States, China, on who's going to whack who next with some more tariffs. And so that's one of the items that we're going to be keeping our look at. As you can see, China came out with news this morning. At this point, every one of the market moves is news related, and the market really has it's trying to juggle around to price in whatever the effects of these tariffs is going to be, and so it's really up in the air. Oil, gold seasonality, I want to hit on that. And then also want to take a look at, and there will be continuing earnings that are coming up that we'll want to take a look at. So as long as I'm moving through it. At the end of today's session, what will happen with this new program, this is called Webinar Jam. What will happen is everybody will receive a link to the non-edited version of the video, of the webinar. What we'll do is basically that'll go out to you, but then I will send out a edited version a little bit later in the day. But if you want to see it right away, you can go and watch that on the replay almost immediately after the webinar is done. So we're looking at seasonality. Volatility continues high, wide ranges. July moves in seasonality. I want to really be taking a look at that. One of our bonus trades we closed last week for a nice profit, VON, which was the Venom, VNOM, profit of about $504. Still maintaining, we had gotten into NVIDIA, YY, BABA, not Grub, but SUPN, and NVIDIA stopped out, BABA stopped out, YY did not stop out, SUPN did hit a trailing stop, but wound up being a very nice profitable trade moving forward. So 4 trading outcomes we look at basically are One, we can win a little, lose a little. Secondly, we can win big or lose big. Our objective with active trend trading and any good trend trading system is to eliminate number 4. That's where our biggest risk is. Let's call our attention the aspect of seasonality. We are in the process of getting through the end of June to go into July. Gold tends to catch a bid going out of, into midsection to latter part of July, and then bounce from then. Get a really nice run up. Gold, well, we'll take a look at the actual chart of gold here shortly. It looks like it is trying really hard to put in a base or a bottom in order to bounce. How far is it going to bounce? In the past, it varies, but if you're trading the leverage ETFs, either JNUG or an option on GLD, you can get a really nice return on that. Another one that's getting ready, July time frame, oil. OPEC met last week. They basically announced that they were going to allow gradual increases in production, but they're going to still confine it. What's happened is that Saudis and Russia wants to keep oil production lower, so it drives up the price per barrel, whereas some of the lesser well-off oil-producing companies want to produce more and more oil for their coffers. Two different ways of providing money. But again, oil, it is doing something similar for us, and I'll just... as you can see here, it tends to bottom in this area here and then go rocket ship from July through about after September. It kind of flattens out after Labor Day, hits a peak mid-October, and then tends to sell off. And so we see that this tendency repeat itself over and over again. And the aspect that we want to be in is be in the right position for oil and also gold, which is typically a kind of a 4 to 6 week window, 2.5 weeks, 3 weeks on either side, plus or minus of these lows is when oil and also gold traditionally hits its bottom and then bounces from there. So we know it's looking and it's searching for that bottom, just hasn't hit it yet. What else we have here? Okay. So if you are not a premium member, you can pick up on the bonus trades and just by registering at this location here. And it's also included in the email that sends out the notification on the recording. Let's take a little quick look at a couple of at the stocks we're looking at. There we go. Okay. Yeah, daily, weekly. Weekly on the left as our anchor chart, daily on the right as what we're going to be trading against. This is TSI. Okay, this is the spiders. As long as we have TSI running down, I am looking to trade this, but I'm not going to try to pick the bottom because it could be here. Go back there. It could be at the 100-day moving average here. So 100-day moving average here. It could be at the 200-day moving average here. It could be down here at the 267.50 level. But let's just pay attention and watch. What took place over here on the intraday, on the weekly chart, of course, is we did get a TSI tick up a few weeks ago as it's bouncing off the 40-week moving average and continues to bounce up a little bit. It ran up and now is in the process of, potentially either one, pulling back, two, back to support for another run higher, or it will break down from here, and this chart will look like that chart I put into the market where you get a pull back, test up, but it's lower test down, test up, and then drop from there. Is that what, and we'll just pay attention. Is that what's going to happen to the market? I mean, I don't know, but that's what it certainly looks like right now. But as I said, I'm not ready to buy this until I get at a level of strong support. That 267.70 level looks pretty good, where it found support before. If it drops that, then we're probably going down into the 266 to 265 level. I want to throw up the Qs really quick, just so we have an idea of what the what the tech stocks are doing. The tech stocks, with what was said with China today, was the tech stocks are going to get whacked. They did get whacked back down to the 50-day moving average. However, they held at the 50. But similarly to the S&P, TSI momentum accelerated to the downside. Does that mean we're going to get all the way down to this, lower oversold condition? Time will tell, but typically when you get a significant acceleration like this to the downside, it eventually does get back all the way down to the lower level of the oversold condition. If the 50-day moving average fails, then we'll probably ratchet down to 167, ratchet down from there to about the 162. And so we could just go into a little bit of a stair-step situation where we go up, step down, go up, step down, go up, go up, step down, all bouncing down to those past levels of support. Put a Fibonacci retracement on those just to get an idea of what what that may look like. Okay, I'm just looking at that, see if there's any comments. And so IWM, again, the Russell had been the strongest of all the entities. Got a nice little uptrend here, broke that uptrend, closed below the 20, but it's still holding well above the 50. Look for support to start coming. Support initially came in right here at the 164 level. And you can look at, somewhere around 162.50 to 164, 4 levels of support. Again, TSI, accelerated momentum to the downside, so watch it to continue to, to fall. Playing both either spiders, Qs, or IWM, any kind of an initial first thing in the morning retracement up into the midsection of this candle, maybe the opportunity to go ahead and get short if you're not, with expecting more downside, with a stop loss just above the high of today. Okay. Let's take a real quick look at GLD. Okay. Here's what I was talking about with gold. Gold, much as we had seen earlier, this was July of last year, right before it went on its big tear. Gold, July of last year, ran from this point to here. That's about 13%. Okay. Correction, that's $13, 11%. That could make a very nice trade with GLD with the options. If I'm looking at trading options, they just put out the October options. We anticipate the move to take from July into the last part of September. So I would be looking at the October options. I'd like to see the weekly TSI tick up a little bit. The daily TSI did tick up just a taste between Thursday and Friday, but then it's right back down again today. Is this a fairly low risk area to be looking at a trade in gold? GLD? Yes, it is, because basically your stop's going to be, if it drops like 119, I'd be out of it to reload in case it rebounded. But that's what's going on with gold. JNUG is the flip side of that. And again, JNUG, look at what JNUG did. Blow this up a little bit. Last July, JNUG went on a nice little run from here to here of about 70%. So that's what we want to be waiting for a nice little bounce up on JNUG. Hammer finished the week last week. We're in that in the wick of that hammer. We see we get a nice little tick up on Friday of last week. We get a pullback today with the weekly tick up. One could, in fact, look to buy at the 1362 level or even at the low today. If we do get a little bit of a rebound starting tomorrow, I would say go over to the oops, that's not what I want. Go over to the, there we go. The intraday chart, 1 hour intraday chart or 1/2 hour intraday chart, and see if we can get an earlier uptick on the TSI. And as you can see here, we did get one a little bit earlier today, but we got a nice hammer, 1340 level of support. So if I test back down in that area tomorrow, I would look at potentially getting long with this. Or if we get a gap down, I'd look anywhere from 1330 to 1310 to go ahead and get long in JNUG. USO. Okay, after the OPEC meeting, USO gapped up very nicely. We're getting it, and so today we get a nice controlled pullback, and we see here on the hourly chart, and it looks like it's ready to bounce again and move out of here. We're anticipating again that end of year, not end of year, but the seasonal move on oil, and so this move back here, 1360 or so, but you can go over to UCO, trade UCO, looking for something similar. It is following a similar pattern. It is back above the 50-day moving average, and so you can measure an entry off of that or retreat back into the 820 moving average, which would be about, let's say, 2880 might be a trigger to get into a trade. Again, nice move here, intraday, hourly chart, TSI tick up, bullish engulfing at the end of the day, and we could, potentially see a move higher moving into tomorrow. What's the anticipated move on this? Of course, back up into the 34 or higher. The anticipation is for oil to move somewhere, I'd say plus or minus $25 from this point through the end of the year. And it is a commodity that if we'll see what happens with the tariff wars, trade wars, if they do in fact take place. The other thing, Gush is another way of trading this. Gush is the entity for oil exploration. We've been keeping our eye on this for a while, and it's connected to the XOP. Again, it's kind of locked in a little move from the XOP up to here, and so we'll see how that goes moving forward. Okay. Okay, I am going to just real quickly. That basically covers everything I needed to cover for what I'm looking at. I'm primarily looking right now at either gold and or oil for a pullback and a move higher this week. I will patiently wait on both the indexes and the stocks that we were following, which were basically BABA. BABA got a nice little sell-off today. Is it, right back into a level of support. TSI selling off hard. Wait for the TSI tick up on the daily at least. and or for us to find a level of strong support. Tesla actually, it sold off over the last few days, but actually put in a nice little reversal candlestick on a daily basis, but TSI, no reversal on that. So I basically won't do anything with that until NVDA just got, it also got ripped to the downside. It's approaching where the TSI is getting where it's almost oversold, and it's reaching down to where it's found support in the past, but we've got stronger support down here at the 220 level and also at the 204, 205 level. YY, Chinese company, YY, held up very nicely at the 50. Actually held up very, very nicely considering, it dropped $5 today, but it held up very well considering how everything else did. So comparatively speaking, YY was a stronger entity. So I'm going to keep my eye on YY. I may very well add to YY if it continues to flirt with this 50 and looks like it's going to bounce. I would add to YY another quarter of position that would bring us up to a full position, and then anticipate a bounce up. Because any type of good news from the regarding tariffs, regarding people backing away from a strong tariff type position on either side will result in getting a really nice rebound on something like YY. And so, okay, guys, that basically covers it. I don't want to do a sticky note. I need to go and figure out how in the world I get to see who is online, because I literally cannot see who's online. I can only see that that you are there. I got stopped out of JNUG on the tick down. Yes. Troy, yeah, that happened to a lot of us on that tick down to the $13 level on JNUG, stopped us out. But again, this may be one of those trades that is a little bit whipsawy, but we know that that gold will go on a run sometime between now and the end of July. So we're just waiting for that. So while we're there, let me go back over here to gold. As you can see, TSI daily chart oversold. Market forecast oversold. Got a little bit of room to fall over here on the intraday chart. Weekly chart way oversold. And what's funny is, see, gold doesn't. Whoops, go the other way. Gold, it does get down, but into the, critically oversold area, and it's approaching that. It could dive a little bit further from here before reversing, but we know that a reversal is in the offing. This was the reversal from in December of 2016. So we know that, so that's what we're standing by for. Is it a death cross? Doesn't matter. Gold in a death cross. You mean right there? In the past, Gary, let me blow this up, and that's a great question. He asked a question. Well, you guys should be able to read that. Is in a death cross, which is basically when a lot of people determine where the 50 crosses the 200. I think this is the 200 right here. Yep, it is. And so, yes, it is in fact crossing. And so we'll see. That may dampen any kind of rebound, but every year that there has been a rebound, even with let's go back to where, as you can see, we had this cross back here just after the December run up or October run up. but even after the cross, we still would get our December, the June, July, May rallies every year, even if there had been a death cross. So you can go back and look at the past charts and see that. So, okay, let's go. I think that basically is it. And so, hey, please let me know. I'm trying to just evaluate this particular webinar providing product. I would like to see it where I could see you guys and see who's all's on the call. But I can see your comments, and hopefully, and the other thing is hopefully you can see each other's comments, and you may be able to respond back and forth to each other. The chat has been opened up to where you can in fact do that. So I'm going to experiment with this a couple of more times, a few more times, see how well we like it. And so with that, I bid you adieu. Have a great rest of the week, and don't try to catch any fallen knives out there, and let the bottoms tell us where they are. So with that, bid you adieu. God bless everybody. Have a great week.